Alrighty, what is going on, traders? Welcome back. Happy New Year. January 1st, I'm recording this. And yeah, 2023 is over. Crazy to think about it, how quickly time passes by when you are, reflecting on a year or so. And it's over. 2023 is officially in the past. December's in the past. And so that's exactly what this video is going to be. We're going to recap over December 2023 and then also our, my whole year in general. So let's just jump right in because I have a feeling this is going to be a longer video than normal. Let's go into week one. I guess the first full week of December, and the theme was just liquidation plays. If you were in and around the small cap market in that first week of December, you know exactly what I'm talking about because it was like all of the potential liquidation plays that were in the market. Almost all of them just dumped in this 1 week. It was quite insane. It created a lot of FOMO for a lot of short sellers, and which we'll get into the dynamics of what I think that created. But unfortunately, and fortunately, depending on how you want to look at it, I did not capitalize on these at all, and mainly because I think I've seen the dark side of them. I've seen how scary they can be, and so for me, I was just very skittish about them all across the board. Because I've seen what happens when I'm too aggressive in the wrong places, when these aren't going to liquidate, and it results to very scary and big losses. So when these were liquidating, I just didn't take part as much as I would have liked. The first one being MLGO. MLGO, I actually took a loss on the front side move here when it ran from 4 all the way up to 10. And I think my thinking was very similar to every other short seller who was watching this, where this one in the past has not actually ran. It's actually just, had a hard spike and then kind of died. And so I was kind of thinking the same thing, where any kind of spike here, eventually, once it was going to top out, it would have just pulled back. But that's not what it did. If we go into the sixth here, it just kept going, right? And unfortunately, fortunately and unfortunately, like I only lost like 6,500. So I kept the loss small. But I gave it I think 3 or 4 tries, which I just shouldn't have. After after midday, when this thing kept holding its level sideways, at that point I have to assume it's not going to give back its gains like it did the last time. And so any short seller who just kind of stubbornly held, learned their hard lesson and just kept squeezing and going higher and higher, all the way to the point where it actually pulled in after hours and still kept going. And then the next day after that, if you look at it here, if you do it again on the 7th. Huge gap up all the way up to 18 and after hours at one point, spiked, and then all out liquidation. And unfortunately, I didn't really grasp it being a liquidation until it was too late, down like sub 8. And so yeah, I did scalp it here and there and made like a couple grand, but it's like had I gone into today with the idea that their objective was to liquidate, or even to think that liquidation was even a potential possibility. Like for some reason, after it had ran like it did yesterday, the day before, the idea that this was going to liquidate wasn't even on my radar. It's like it just totally escaped the realm of possibility for me for some reason. And had I just kept that a possibility, I probably would have, been short earlier, thinking that might have been the case. Because once this bounce was super, super weak here. Once it was insanely weak, this pop was insanely weak. I think this is right around red green anyway. Like it just gave the price action and feel of it that it was going to liquidate. And before you know it, they just kept the price action exactly the same, and they took it all the way down to $2. Insane downside volatility, which again creates a lot of FOMO for short sellers. In terms of my charts here, yeah, MLGO, the actual front side here move. Looks like a 1, 2, 3, and then 4 tries here. So yeah, too many. Luckily, again, I gave up pretty early in the morning. Didn't touch it anywhere in the midday, which I like. I think I actually either broke even or made a little bit back on this parabolic, but it wasn't a great parabolic. It was pretty crappy, all in all. So, I'm not upset about this trade, but you'll notice a theme here in this monthly recap that a lot of my losses were just bigger than they should have been. Not because they were too big of losses, but because I just gave them 2, 3, 4, 5 tries, which again is in the realm of how much I like to give something. But I guess the particular theme in this month was like, you know what? I already knew they were going to be losers. Like, why giving them a second try didn't change anything for me. It's like I already knew they weren't really going to work. But yet for some reason I'm giving them a second or third try, which again makes the loss from a small loss to then an average loss and then to a slightly bigger than average loss, right? It just kept compounding the losers. when I just shouldn't have. And again, MLGO was the very first example of this. So there's that. Now, in terms of more liquidation plays, because like I said, there was feel like a billion of them, right? But there was maybe a half a dozen that died within this week time period. The one I took the most advantage of was GDHD here. And by taking most advantage, I say the most out of all of them, but still did not take any large amount of gains from this thing. I made about, what was it, about 10K on this, which again is great. I think it is my biggest gain of the month here. Yeah, this $10,675. But again, for those who have maybe watched some of my previous years or last year's videos on liquidation plays, I mean, it was like I was making 30, 40, 50, sometimes 100 grand minimum on these plays. And so that's why I say in general, like I've been on both sides of the coin too much now, to where the point where even when these are liquidating, I just don't have a risk appetite for them anymore. Because of those who've been around, like I have seen what can happen when you're on the wrong side. But yeah, I think essentially, and also ultimately, I made 10K because I was just small size, and I also was very nimble and safe in this area. I really just kept, anytime I saw it get bounced against me, I just covered, and I didn't really have size with thinking they were liquidating until it really broke below this $12, $11, and $10 area, and then really just caught this secondary fade from, call it 8, 7, 6, all the way down to, 3 or 4. If we look at the trade here, yeah, this is it. Let's make it bigger for you guys. So yeah, I mean, first attempt, immediately cut it and said, nope. Started again. It worked originally. Then they started bouncing again. I said, nope. And then again, like I said, it wasn't until they started breaking this low of day here for the I guess final time you could call it, is when I really started to size in. And then I really didn't get size until maybe these more candles, and then just started covering it on the way down, right? And again, I made 10K, so this was maybe a few hundred, maybe a couple thousand shares at most. And again, 2020 Kyle, I would have had 10K shares from like 13, right? And I would have made, 120 grand. It would have been insane, but like that's just not where I want to be with these things anymore, unfortunately, for better and for worse. So the next one here was WBUY. Again, another one that I just didn't think, I don't know why I didn't think it was going to liquidate. I remember they put out a PR, it squeezed up to, 14. And the next thing you know, they took it straight down from 14, like straight down. The liquidation just began. And the same idea, I just missed almost all the downside. I remember trying to scalp it a little bit towards the end there. If we go back to the 6th. Yeah, I remember shorting this bounce here and then just taking it back down to like 4. Maybe I had some down till 3. But again, it wasn't much. I made like, I don't know, 3K. Again, still something, but again, it's like had I, again, put myself, and again, this is the theme here, put myself back into 2022 before I knew better. I mean, my gosh, I would have been shorting this thing any chance I could with as much size as I could. And who knows how big of a gain it would have been, right? And so, yeah, it's not something me having FOMO about. I really didn't have much FOMO. It's me reflecting on like where it was to where it is now for how I'm handling them. And yeah, so just smaller gains. I have to be okay with it. So yeah, made a couple grand here, but really the actual play for me was the next day, which tends to be the more safer play that from my experience. But again, who knows in the future if they want to play make games with them on the second day. But they did gap it up on some pretty solid volume pre-market, and then right out the open they killed it. And that was kind of in my watch list. When I made my watch list the night before, I said if this thing gaps up or morning spikes on decent volume, then I want to get short because I think they're gonna fade it lower. That's exactly what they did. The problem is, if you look at my trades here, I covered insanely early. I got short in the high 2s, and then last ad was a mid 2s, and I was all out by like 220. And then what do you know? It ends up going nearly $1 a share lower, all the way down. I think the lower day was like 121 or something like that. Insane. I just did not expect it, and I honestly should have. Like some of these day 2s really just do go all day, and so again, looking in hindsight, I really don't know why I covered there, other than just the fact that I was just being nimble, and I just did not want any part about this to bounce back against me. But again, in hindsight, it didn't at all. So one of those, again, like I said, I just have to accept it. But it resulted in this week being the best week of the month, so I have to give it some credit there. But ultimately, just wasn't. I don't know the word I'm trying to find here. Whether it's unsatisfied, there's no FOMO per se, because again, I've seen the flip side of these things. And again, for those who were in 4-leaf clovers and clover trading, I made a video lesson on them, and I actually said, and we'll talk about this more later in this video. But I said these liquidations have become too easy, right? And I can say that because I've seen when they're too easy. Back in 2022, when I was making a ton of money, some of my new biggest gains, they were too easy. I didn't even have to think about what I was going to lose because there was no losing. It was like you just got short and you made money. And that's a whole lot like that week. And I kind of said, I was like, these are too easy. This makes me incredibly scared for what's to come because one of these is not going to be easy and it's going to rip people's faces off. And I'm sure for those who traded this month know exactly what ticker we're going to go over later because that's exactly what it did. And again, I dodged a massive bullet because of this feeling that I missed these liquidation plays because they were too easy because I'm used to them being insanely hard. And so I've become just insanely risk adverse towards them in general. But nonetheless, week number 2, RSLS, I really, really am upset with this trade. Mainly because if you look at the daily chart, like any spike or gap up, it is met with selling. Again, but the key part is like just being there for the selling. Like it's all about timing. And unfortunately, I kind of gave too much weight on it being like a gap up and then crap versus a spike and then fade. But as you can see here on this particular day on the 13th, that's not what it did. It spiked and then it faded, and I really, really screwed it up. If we go into that day, again, like I said, I was going in thinking it was just going to be kind of a gap and crap. It's not what it did. It needed a full, call it 30 minutes to an hour of spiking before it finally died. And I just, actually, let's just show you the charts to make sense of it. Again, same theme with the losers is that I'm just giving it too many tries, right? We give it one, I cut. I give it another one, I cut. I give it another one, I cut. So already in the first 3 hours, I've given it 3 losses. Not to mention the third loss was right into the last push, and then it just faded. And again, it's like I have all this endurance, you can call it, to keep taking more tries. And then for some reason on the final time when it counts the most to take that last try, aka up here, I just don't. And it drops from, the 50s all the way down to the 40s. And I take a step away. I'm really frustrated at this point. I take a step away from my computer. I don't get back until after this bounce is faded or failed, because had I been there, this probably getting short in the high 40s would have been a really sweet spot. Again, unfortunately, I wasn't there. I got back around like right here. And so I start shorting here, and then I don't get the full size. So I start shorting any pops I can, into 40 cents, which is up here. And I end up swinging it because for the same idea of the daily chart, no matter what, whether it's a spike or a gap up, you can clearly tell the trend here, what happens, in a few days after. It just fades right back. And so eventually, yes, it did that. Unfortunately, I did not have the stamina, the endurance, the patience to willing to see that through. I wanted to see sub 30, and unfortunately, I think on the day I covered, it just tapped. Yeah, this day right here, where I covered, obviously. On the 15th, it panicked. I think it just tapped 30, right? And then it bounced all the way back to 35. And at that point, this is a terrible cover. Obviously, like the next day, I think it goes back below 30. But this is the kind of cover where I tell myself like I lost energy for this thing. Like I already knew I screwed up on the day it mattered, which was taking it from 50s down to 40s, or sub 40, actually 39 or 38 was the low day, I think, that day. But trying to swing it to get more gains out of it for a longer term idea just wasn't the what's it called, energy efficient play, right? Me holding it and then giving it all back and covering it near the high a day. Just super annoying. And again, I made back a little bit, but nothing substantial to the actual loss. So I lost like 5,700 on it totally, which is again just annoying, because it's like I had the right idea, like I said, it's just whether I can time it or not, and I timed it terribly, right? So that's the case of it. And again, as we speak, it's back down to 25 cents. So again, I think this was the day I covered, right? The 15th. Had I just held one more day, I would have gotten the sub 30 covers I wanted. So it's all about just having the right endurance, and can you even stick to your plan with the right amount of like emotional energy it takes to be in a trade like that. And for me, I threw in the towel. I was like, you know what, this isn't worth it anymore for me. I don't have the clarity on this kind of trade after screwing it up so royally on the top day to continue. So there's that one of a loser. Another one, GOTU, another frustrating loss where there's really no different way I would have played this other than just having to be willing to be more risk-seeking on this particular play. GOTU, has always had a history of some size or some kind of solid runs, but it's been more of a, I don't want to say a legit mover, but it's not your typical, penny stock, right? It's not your typical crappy low price stock. It moves very chop-like. You see these runs. This is a very choppy like run. And even the backside is a very choppy, like not choppy, but it's pretty straightforward. But it's not going to give it all back in one day, right? You kind of need a 3, 4, 5 day swing idea to capture the backside. Even here, right, it ends up having backside. So every single bounce or run, there is backside, but it takes a few days. And so when this thing ran from 2 to 5 plus, I thought, okay, this is extended enough. And again, unfortunately, I missed this first red day, thinking it wasn't going to be this big or this wide of a range due to the fact that the previous days, it's never had a red candle of this magnitude being able to go from low fives all the way down to low fours. There's really not many days like that in this history of this chart, so I just did not expect that daily to happen. But nonetheless, even when it was over towards the end of the close, I thought to myself, okay, well let's swing overnight. Like let's catch one of these small gap down ideas and a smaller red day. Maybe, and because the range was so big on this day, I thought maybe the range on the second day will be bigger, and it goes from, gaps down to like 4.4 or 450, and it goes down to like the low day, same day, right? Which would be worth it. It would be enough, range to be worth it. And so if we go into that day, what's the 15th, I think it was, I said it was? Yeah. Again, just insane panic. I mean, I just did not expect this at all. I thought if I was going to get short for some kind of down day, there would have been some kind of bounce. And that just wasn't the case. It was straight down from the open all the way down. Within 10 minutes, you're down nearly $1 a share, or actually exactly $1 a share. And so it wasn't until this late day bounce that I really liked it. Unfortunately, this move took it on SSR, so even more frustrating. I didn't feel anything until down here in the 460s. Like I wanted to start shorting all the way as high as the 470s, but every time this slightly bounced, like these little bounces here, I was always 1 cent away. For whatever reason, and again, because if you're on SSR, you have to get filled into the ask. And so every time I was sitting on the ask, I was always 1 cent away from all of these little pops here. So it wasn't until I just said, you know what, screw it, and I just tried to market order into the close. So any uptick I just got, which is why you see it here. Pull up my trades, right? It's like I just didn't get short to the close, which is super frustrating because it's like a full, 15, 20 cents of an average. I would have gotten better. And my idea was, okay, if this doesn't uptrend in after hours, or ideally fades in after hours, I am going to go in with this having enough confidence that over the weekend it will then gap down and then have a second red day. Being that it doesn't get over this bounce high, right? And especially doesn't get over a 5. Like 5 would have been the worst case scenario had it spiked in after hours. But I thought, this shouldn't really uptrend at all in after hours. Because again, and the reason why I say that is because previous days into the into the run up of this stock on previous days, it indicated a gap up because it was already uptrending in after hours, right? So I was like, I do not want to see that. I do not need any indication whatsoever that I'm going to be gapped up on the next day. And what do you know? It goes up on me. So we're ending again a few minutes before the close, after hours close, I covered. I said, nope, that's not what we want. I lost like 2K, so very small loss. But nonetheless, it was just super frustrating because there's nothing I would have really done differently. Like I said, I have to respect my plan, which was like, if it's going to uptrend like this on me, I just do not want to be in it. And the only way it could have been different is if I just stuck to like $5 risk or like 520s, like the high a day here at all costs, and just being willing to have gotten an unfortunate gap up the next day had it really gapped up above these levels. Being more risk seeking, like I mentioned, because the next day, if we go, let's go to the 16th, or not 16th, the 18th on Monday, it gaps down huge. It literally gaps down from, again, it closed at 460s. It gaps down to a whole $1 a share lower, which is really frustrating because, again, had I actually, let's call it being risk seeking and just stuck through with that kind of idea, it would have been almost approaching a $10,000 gain. I think it would have been high 4,000s, or like 8 or 9,000. So yeah, unfortunate and frustrating, but like I said, there's this month in general, the theme was me being pretty risk averse to almost everything, unfortunately. And again, it saved me on any big losses, right? And I hadn't taken any losses above $10,000, which is great. But it also led to the backside, or on the flip side of me not taking part in any really large gains either. And again, this is a good example of that. So if we keep moving forward, CCCC, or C4 here, very similar. Almost identically similar on the front side to what was it, ALT, right? These days right here, kind of a few days of running, and then had these two kind of choppy days, and then the third day was a breakdown. Quite crazy how similar CCC was, where it's 2 choppy days, and the third day was a breakdown. That day is the day I did make money on the 18th. If we go into it. mainly because it broke down. There was like a $4.90 to $5 kind of support between those 2 days that kept spiking to the upside. And so the moment it broke that day on the third day, again being very similar to ALT, which was like mirroring it for some reason, some odd reason, gave me the confidence to get short this, and I took it down to the low fours and covered there. If you look at the trades, let's get rid of GOTU. Yeah, CCCC. So like right out the open, I just had a feeling, if this is going to mimic alt, it's going to do it right away. That's exactly what happened. So I got short, and then I covered into the low fours. I had some size on left to think it could break sub 4, but once, I don't remember exactly what I saw, but right before the spike happened, I just saw the idea in my head of like, this might not break 4, and even if it doesn't, or even if it does, do I really care to hold on to this last piece after what I've already locked in? I said, no, I don't care. And so I covered. And, in hindsight, it looked great. It never really went below that price. In fact, again, if we go to the daily chart, does it ever even get to that price ever again? No. Yeah, the next best lows is like 420s, and now it's back in the mid 5s. So pretty impressive there. Again, no way to know besides in hindsight. I just got good covers there, but made 6,500 there. So again, one of the better red day moves I've experienced this month. Again, that wasn't a liquidation play, so that was really cool to have there. But here's the part where we go back to the liquidation plays. ZJYL. Okay. This wick is not a misprint, guys. This was trading in the 20s, 30 to $20, and yes, it did reach 500. And it was not like a HKD scenario. It was not like an ILAG scenario or a top scenario where it just ran. No, it gapped up there. Very similar to those who watched my monthly recap. I think it was August. And I've talked about this ticker way too many times, but RETO, where it gapped up from like 350 halt up to 6. This thing was a nightmare for anyone who was short, and unfortunately, I do know a few buddies who were in this short. And so if I knew a couple of them, who knows how many were actually caught. Again, it's so illiquid, it's actually scary to look at. If I pull this over here, it's my face is in the way, so you can see it. But again, looks like the beginning of a liquidation play. Now, granted, the volume is really, really low if I bring the volume back over here, right? I mean, it's only, 30,000, 40,000, 50,000, which is volume, but it's nothing like compared to MLGO, where it had hundreds of thousands of volume a minute, right? And versus all the other liquidation plays where they were just much more consistent, where this was a little bit, it just felt off. And unfortunately, due to the fact that it was selling off from the 20s down to now 10, I gave in and I did short some. In fact, it was the worst short ever. It was actually the low a day. Granted, because and this is why I say I'm okay with being so risk averse on these, because I was risk averse on this one, it saved my butt. I shorted like a couple hundred shares on this low, actually 300 shares at the low. I filled the bottom. It was awful, right? But the moment I filled, I immediately knew, I'm like, there's something off about this. And again, I don't know what's going to happen here, but I want out. I want out immediately. And this was right around when it was halting up, so I didn't fill in the halt up. And then it indicated, up $10 a share from the 12s or 13s all the way into the 23, 24 range. And so I was like, yep, no, get me out. Like there's no part of me that wanted to be in this. And again, thankfully it was only 300 shares. So right out the open, it filled me. If we go to this daily, right? You can't even see it, right? I shorted and covered. It looks like I almost break even, but it wasn't. I lost $3K, $10 a share on 300 shares. And immediately halted up again, right? So it opens up, gets a low of like 21, but I marketed it out, so I filled it like 23 out the open, and then immediately halts out to 25 and halts right here. Now, I don't remember exactly how it looked and how quickly it looked. I think it was immediate, where it was almost immediately indicating like I think as high as 700 at one point, maybe even higher. But the point was, it from the beginning, it was insanely scary for anyone who was short, because it indicated levels that like would ruin your account. Like your account would be gone. Forget having any max stop or stop loss or risk management. Like when it gaps up on you like that, you're done. There's nothing you can do. And that's exactly what this was, right? And so because it gapped up, because it was indicating a gap up so high, it actually didn't trade for the rest of the day. And again, this was at, what time was this at? This was at like 10, almost 11 o'clock, right? If I'm not mistaken. Yeah, like 11:30. Eastern. And so you're in this thing short for another, 4 hours, 4 or 5 hours, waiting for this to open up. And so once the after hours market closed, or once the market closed and after hours began, the opening print was $500. Okay. And it was so volatile. At one point it was down as low as 50s. Like there's just prints everywhere. It wasn't even like it was trading fluently. It was just like there's prints all over the place. And yeah, it sucks. I mean, I know a lot of short sellers took some pretty big losses on these ones. And then look how liquid it stays. And even now, as we're speaking, this thing is still in the 200s. It's insane. I mean, yeah, it looks like it went as low as 50 at one point, but just crazy, crazy. And that's kind of why although in some aspects I'm disappointed on my month not being what it was of December, I'm also very grateful, but because I was risk averse, saved me from a nightmare of what this play could have been. Again, doing the math, right, guys? Like I had 300 shares from practically dead bottom. Let's say worst case scenario, I covered at 500. Well, what's 490 shares or $90 times 300 shares? Let's just do the quick math so we can relive my nightmare. 300. Yeah, just a casual $147,000 loss on 300 shares. Like, and losing what? What is that? 5,000%? Like, insane. Absolutely wild. And again, I couldn't be more grateful, like I said, why I dodged it, because like I just told you guys, that video lesson I made for 4-leaf clovers, and then what I mentioned to you guys, how we'll talk about this later in the video, of like, all of these liquidation plays earlier in the month were just so easy, and me reading the sentiment of like other short sellers or people who wanted to learn to short sell them, or, I mean, guys, I saw so many comments of like, oh my gosh, I've never sold a liquidation play before, but like, I'd really love to start. And whenever I read that comment, I just got more cringeworthy about it. Not because it was anything against those people who said that, but because it's like, oh my gosh, if only you knew. If you only knew the being on the wrong side of these things, right? Because again, if you watch my videos, you know how many times I've been on the wrong side of these things. And it's like, it looks really nice. It looks really fun and euphoric and awesome to be short something like MLGO, right? It looks amazing. But the moment you are dealt with something that is not this and is this, you never want to trade these again, right? And so I knew that. I didn't expect this to be the what did it. Like I didn't expect that this was going to be a 1,000+% gap up on an indication like this. But I just knew like that these were so easy. This week was so easy of liquidation plays. I thought to myself, there are way too many short sellers that have FOMO, and all these promoters just need one thin kind of ticker to ruin their lives. I don't know how it was going to happen. I don't know how frequently or how long it was going to take, but I was like, I am scared. I'm not aggressive after seeing these. I'm actually fearful. And that's exactly what saved me from one, shorting small size, but two, even with the small size, avoiding a 6-figure loss because I just said, this is not it. Get me the hell out. So yeah, lesson learned. Again, going forward with these, my gosh, guys, I am at the point now where I am probably okay never trading them again, to be honest. Yeah, maybe if we see, liquidations like this that have this much volume of MLGO, like they'd be enticing to come back. But again, the liquidation and the volume that MLGO had was like 1 in 100. This was like one of the best ones and the most brutal ones I've ever seen. So it's like, unless I'm holding out for that, there's just so many of them that I just rather not touch for that same reason of like the fat tail or the end tail risk of these is just so scary. It really is. There's no amount of money I can make on these liquidation plays that would save me and make me feel protected from against this. Like, again, hypothetically, let's say I did trade full size, as big as I wanted to be, as aggressive as I wanted to be, on every single one of these plays. Right, so let's say MLGO, let's say I made like 200 grand on MLGO, and let's say I made another 100 grand on GDHG, and then I made another 70 grand on WBUY, right? Like, even if I made that much money, the moment I would take the exact same size on ZJYL, I would have blown up. I would have been gone, right? I would have had thousands of shares from who knows where I don't know, somewhere in the 20s, and I would have covered probably in the 300s plus. Like, I would have been done. It would have been hundreds of thousands, if not $1 million plus loss. It would never have justified any of the gains I would have made on these plays, right? So, I can go on forever about this, so I'm going to end the rant there. But like, hopefully you understand where my head's at with these and why I'm ready to. I'm the closest I've ever been to throwing in the towel to them, because it just That again, that tail end risk is just not worth it. It really is not. It sucks for a lot of people who I know who were short this. Not fun. So, anyways, moving on. Fannie Mae here, blast from the past. For those who've been trading for, I guess, at least 6-7 years, Fannie Mae was a very fan favorite. Way back in the day. Awesome volume. One of the best liquid OTCs that have ever existed, in my opinion. And we got a good run early in the year. I did remember trading this earlier in August. And we're back. We broke out in December here over this 90-cent level. I took this long. Was the easiest long and breakout trade I've taken in who knows how long. Was never down the moment I bought, and I was able to sell it in the 110s plus, and then shorted the next day and made roughly the same amount. And even as as I'm making this video, we're hanging out in the low ones. I don't know what that means for the future. I would love for it to keep supporting one, and then maybe in 2 or 3 weeks break out again. That would be really awesome. But yeah, this is just always a great trader. If we go into the daily, intradaily, I should say, the breakout was 90 cents, and so beautifully held the day before, which is great because I really wasn't watching it here. And then out the open the next day, it just broke it. I bought. I was like, yep, it's breaking out. We're going to buy it. Risk red green. And like I said, never down. I mean, if anyone who bought at 90 cents, you were immediately up to 91, 92. And then from there, the rest is history. Went as high as 105 midday. I remember selling some back below 1, thinking that if 105 was the top, it would really suck for this to fail and me give back my gain. So I did sell a little bit. But then when it kept holding 1 or the high 90s and it started uptrending again, I rebought on this little perk and then sold the rest above 110. Again, to show you those trades there, let's get rid of this nightmare ticker. Fannie Mae. Yeah, so bought at the open. Again, sold there on that. And I guess not this $1 crack, but this $1 crack thinking it might have gone lower. Rebought that sell, right? And then sold the rest here in the late day push. Normally, in a more stronger OTC market, I would have actually held this overnight. But being the fact that if you notice even the last move here, this actually was a very slight gap down. So in the previous run, both these now have had 2 strong green days. The next day it gapped down just ever so slightly. I thought to myself, is it worth it for me to hold it overnight in this weaker OTC market where things aren't going to typically gap up? If we were in a strong OTC market, like if you were trading 2020 and 2021, you could have gapped anything. It was like any ticker that was running on the OTC market gapped up the next day. But again, we're not in that market. And so that is why I sold it into the close. I thought to myself, no, given the fact that the last run gapped down the next day, and again, given the market we're in, I'm like, I don't need to hold this overnight. That was the right decision. It did gap down just slightly, and then I did short out the open here. Pulling up my trades here, right? Did short right out the open. Covered in the first pull right into the $1, covered the rest into the mid to low 90s, thinking like $90, the 90-cent kind of breakout would hold. Turns out it didn't. It actually did go below, and actually as low as like 85, it looks like. But no big deal. Again, I made, what did I make? I made 5,000 on the breakout, and then I made 4,000-ish, 3,900-ish on this short. So pretty sweet. In an ideal world, I wish this would have extended itself even further. Like if this had one more day to like 130, 140, 150, it would start becoming like a really AA plus trade for me. But given the lack of extension, but just smooth and liquidity that the OTCs like this ticker can provide, I'm just happy to have made a single breakout trade and then a single red day trade. Really sick to see, and I hopefully knock on wood, this breakouts again sometime in the future. That'd be really sick. Last couple of tickers for the month for me. And again, right on cue with the trend and the theme I've seen this month, which is UP. UP was my second biggest gain. I made 9K on this red day. But let me go into why that frustrates me. I know it's very counterintuitive. Like this kid just made 9K on a ticker and it's like frustrated, but this trade incredibly frustrates me, and it's only because of myself. I have no one else to blame but myself. But essentially, again, great runner. Beautiful when it has multiple green days in a row. It's done this a few times now, back in September, a smaller one back in November. And when it has red days, they're usually pretty ugly. I mean, they give back the entire previous green day. And so going into today, or really going into this first day, right, on the 26th, I thought to myself, if this has a red day, it's going to go down as low as like $3, right? Unfortunately, it didn't do that. It actually supported itself and then came back green. If we go into the intraday here, yeah, right here, right. And I thought this might have been a little bit of a blow-off like move. It wasn't that big, right? But when you're dealing with kind of a different moving ticker like this was, I thought, that could have been it. And so out the open, I start shorting. I short into this bounce, and then it comes back green, and then it holds green. So I'm like, no, like we got to get out. And unfortunately, I ended up losing 5K, and I ended up being like 2K more because I tried to short it into this bounce and cover again. If we look at that, yeah, right here, which I just shouldn't have happened. I just should not have reshorted it, and this is terrible. I shorted it like thinking it was going to go red, and it just didn't. But yeah, first loss, totally fine taking this little portion. Like, that's totally fine. Very acceptable and willing to take that risk to prove to me it's going to come back. This trade here, this second attempt, was just not necessary. It just sucks. I should have waited for it to either this bounce to fail or prove that it's actually going red. I shorted here just thinking like, oh, it's going to go back red. And it's like, no, it's not. It hasn't proved that to me yet. And so that kind of added an extra like 2K onto that loser, which I really don't like. Because again, I'm compounding the loss. I'm taking a second try and taking a 3K loss, which is I'm very willing to accept, into a 5K loser. Like compounding that loss to almost being double or on its way to being double is just not what I want. That was not what I liked to have. And again, and I say that because on the flip side here, I make 9K on this red day. Okay, great red day. Finally does do what I thought it was going to do, which is give back almost literally its entire green day move, going back down to the lows of the previous day into the high threes. And again, looking at the daily chart, I shorted out the open, a little bit late out the open. I wish I would have gotten it red-green. I ended up getting it at the bottom of the first candle. Shorting into this bounce and then watching it fade and covering pretty early. I really don't love these covers here, but I'm okay with covering these here. Just thinking, I thought to myself, yeah, it should get the whole candle, but in case it doesn't, I'm okay just taking the mid to low fours, being a little conservative. But in hindsight, yeah, it actually did go all the way down and didn't even bounce. I mean, my gosh, talk about going straight sideways into the close. Very odd action. But yeah, made $9,000. And the issue, what frustrates me here is because like when I look at this daily chart, right, this is an A+ runner for me. Maybe not A+, but this is an A grade first red day setup, especially after going higher. So like, I was willing to lose, say, 3K, 3 to 5K on this first day. The fact that it goes higher with more blow-off volume and it gets even more extended, it should be pulling me to be like, okay, now I'm going to risk 7, 8, 9, 10K, right? It just got even better. And so there's no reason why I shouldn't have risked that much. And again, on this red day, I only had 9K shares. And again, if I was risking the previous day's high at like 610, 620 to start. But once it immediately, after this bounce here, so far away from the high day, like $6 at worst should have been, if not high day. And yes, it didn't really offer as big of a bounce to get short. Like if this had gone back to the 560s, I would have loved getting short up here. So it didn't really offer that much of strength to get size as much as I wanted. But like I had 9K short. I should have had 15 to 20K. Right? And I should have probably had a little bit of size to wait for that, sub 4 move. Again, making 9K, sure, I'll take it. But when you combine the entire run, what's my P&L of this ticker from the entire run? Losing 5K and then making 9 back to being up only 4K on this kind of a daily chart, like that's unacceptable for me. I should be walking away with this ticker and making this video telling you, yeah, I made 15, 20, 25 grand from this thing. Right? Because it had that caliber, that A grade for me, that made it this good. And I just didn't, right? And so again, it's along with the theme of like, for whatever reason this month, I just was not risk seeking enough across the board on all things. Some things merit themselves. Again, I'm super happy I was risk averse on the liquidation plays, but like on a first red day setup like this is my bread and butter. There's no reason why I shouldn't have been bigger here. Other than I just didn't really want to think about it consciously in the moment. I don't know what it was, but it frustrates me because this should have been really my month maker. Like if I made 20K on this ticker, like again, talk about double, like well over double my month, easily by adding that onto here. So that's the frustrating part. That's what I really like. It irks me about. And then not to mention it to lay on the theme of not only not being risk seeking on the gains, but then compounding my losses on the losers as well. All here, For those who've been trading all, you know exactly what I'm talking about. This ticker has been choppy for longs and shorts. Now, granted, it's been much more kinder than longs. Like anyone who had any kind of patience longer than a day, you usually are making money. But on this day, this wick day or this doji day into the next day, again, just for whatever reason, I'm giving it 3-4 tries. I don't know why. I knew this ticker was a pain in the butt, and for some reason, I'm still willing to give it another try to see if it fades. Like, I don't know what I'm thinking here. Again, let's get rid of this one. So alt, missed this pull, and so got short into this bounce. Unfortunately, I was waiting for like 1150, so I only had this small starter, and it was so small I just didn't care that I didn't even think about covering it here. Added into this bounce thinking we were gonna fade and like roll over. We chop around more and more and more. I then cover most of my size, but take a little bit overnight. I'm like, okay, this is a weekday. It had its first warning move. It needs to have a bounce. And then the next day, it's going to kind of chop and then eventually do a similar move and fade to lower. Not the case, right? The next day, for those who know exactly what happened, out the opens week, why am I chasing this knowing it's going to be choppy and there should be plenty of opportunities to short a bounce? I don't know. Cover that. Reshort at the lows again. Why? I don't know. And then once again, cover again. It's like all these said and done, cuts are small in the moment, but then when I look at the final P&L after taking 3 tries and just taking terrible chasing like entries, just covering to strength both times, I lost just under 5K. It's like, why am I letting these losses compound is I think the biggest reason why this month is just not been great. Now, granted, I paid a lot in borrow fees and borrow interest, but like, it just, that was the epitome of this, right? If I had just, there's so many losses, for the sake of this length of this video, like there's so many losses I didn't go over, but I just went over the bigger ones that compounded themselves. But it's like, my gosh, almost every loss I can think of on the month where almost most of them I took at least a second attempt. And if I had just cut out that second attempt, it would have saved me thousands, like 10,000 plus. This month could have been so much, it would have been a $50,000, $60,000 month. No, of course not. I wasn't risk seeking enough. On the gains, but like in terms of just being defensive on the losses, for whatever reason, I was so willing to take another loss, except being more aggressive on the ones that were actually working in my favor, right? So that was really the theme of this month, which again, I'll take 13,000, don't get me wrong at all. But usually Decembers have been some of my biggest and better months, and this was not one of them, right? I think for that reason, right? That dynamic of being aggressive on good gains, but then for some reason feeling aggressive enough to give these crappy trades 2, 3, 4 tries, like it just doesn't make sense. And so that's really something I want to go into 2024 of really being conscious of like, I usually make pretty good trade plans. And so if my first trade plan is wrong, like I'm probably going to be wrong the entire time, right? If I'm right on good plays, like I'm usually right away. There shouldn't be any reason to, yes, sometimes it justifies giving it a second shot, but at least be patient. Like if I'm going to give something a second shot, do it like RSLS where, I don't give it any of these third or second tries on the front side, but once it fails, then get short on like that midday bounce or wait for a lower high. Like something just that requires a little bit more patience. That kind of idea. Because again, if you look at my gain, my average win to average loss, like I'm practically 1-to-1. It's not good. I know my risk reward hasn't been the best over the course of my career. It's only been maybe 2-to-1, 2.5-to-1 at best. But again, that's also averages. But again, to be close to 1-to-1 is definitely uncomfortable for me because think about it, when you do 1-to-1 risk reward with a barely above 50% win rate, you're on the cusp of being unprofitable, right? You're like right there where any bigger loss, any change in worsening those stats, like you fall over to the side of then being unprofitable, right? And that was kind of the case with most of my months the second half, where it's like you took one big loser in November, I was red. I took another big loser in July, I was red, right? And that was kind of the theme of this second half now that I'm reflecting, and I was reflecting on my year, where I really don't want to continue that because it's not great. Like, again, so going in, I guess we'll segue into my yearly review here. This is great. I'm super stoked to be up 850,000. And this is gross. This is after borrow fees. With borrow, if I didn't have borrow fees, I made like 960. So I made like 110 in borrow fees and borrow interest and software fees, all the fees that are included, right? About 110,000. So call it 10%ish. So that's great. I'm super stoked to make this much. about 96% return on my money. Way better than 2022 for those who know what happened. Like I traded with way too much money. I had nearly 2 million in all my accounts. And again, 25% made just under 500,000. Started with way less, right? Under a million and made, almost double. So super, super stoked about that. But again, if you look at how it played out though, 850,000. Well, okay, let's just do the math of how much the second half of the year. And again, I already know the answer to this, but just to show you the gravity, right, of all the second half months versus the first half, right? Do here and then August, and then let's do July. Enter. 66,000. So less than 10% of my year. What is that? I mean, what's 66? I want to do that math. Let's do this divided by this. So what? 8%. And I don't know why it's in dollars, but we can change that if we go to like formatting. Let's go to, where is it? Format cells. Give me a percentage. So 7.78% of my year came from the last 6 months. Meaning 93% or 94%, whatever it is, 92% came from the first 6 months, right? So granted, I'm totally glad to make an extra 60K. I'm not knocking 60K over 6 months, but like to make so much in the first half and then so little in comparison to the second half, like that somewhat concerns me. Now granted, I totally get it. Like my summer and fall months have never been that great, but I've never also had such a large discrepancy of the first half versus the second half where it's like, holy crap. Like I in some cases, many traders would have been like, just take the whole second year off, right? Like, why are you even showing up? But granted, in hindsight, did I know my second half was going to be that bad? No. But again, all the things I just talked about a couple minutes ago, I think is the reason why my second half wasn't as great. I think I want to go into 2024 being much more selective. On top of the fact that like my entire year of 2020, my profit factor is like 1.8. And again, for those who know the stats I love keeping half my gains or more, which means you have a profit factor of 2 or more. So yeah, I mean, I didn't even keep half my gains this year. Granted, I'm still, again, the bottom line profitability is the most important. So like, I'm totally grateful for having this awesome year. But when you then digest into the aspects and the different angles of how I got here, there's just more improvements to be had. One of which that like I had improved upon, which I'm very happy about, but still need more improvements, is the losses, right? These losses are smaller, which is great in comparison. Like I mean, last year I made almost all my biggest losses were 6 figures. Only one 6-figure loss this year, which is great. And this was my max kind of stop idea, and then I lowered it even more to 50,000. And my max stop idea is still at 50,000. Part of me wants it to make it even lower, and not honestly a max stop where like I cut myself off, but like if I'm ever gonna risk just even say over $10,000, it needs to be on a really really great play. Like unless maybe there's some times where I'll justify myself being able to give something a second or third try. Like if I think it's really worth it, and yeah, doing 2 or 3 tries it ends up being over 10 grand, then so be it. Like that's gonna happen. It's okay. But like if I'm ever trading like an A or A plus trade and I risk 10,000, like that's really the only plays I really want to do it on. Because too many of these bigger losses were ones that I maybe thought were A plus or just thought they were worth being aggressive on. But if I really thought second or thought twice about what they were or what they meant, or how I should go about them, I just shouldn't even have had these, right? And so yes, I'm grateful that these weren't all 6 figures. So again, if these top 5 losses were anywhere near last year's top 5 losses, like I would end up the same amount. I would have given $300,000 back, which is great. I didn't do that. Awesome. Pat myself on the back for that. But like, I just think there's a better way to go about it still, where I can be more protective against bigger losers, but then still be very aggressive when the times call for it. Because again, specifically AMC and CVNA were trades that like in my head I thought they were A plus, but how I managed them was so bad it resulted in these losses that just were not necessary. They just did not need to happen. So that's really what I want to go in for, and I think if I can do that, I really think I can have myself a 7-figure year. I'm grateful to be up over 4.5 mil, but like the only 7-figure year was 2021. And that's because the market was insane. Like I skipped $1 million and made 2. But every other year, right, it's always been in the high I guess this was 2019 when my accounts were still growing pretty significantly, but like 2018 was 30,000, 2019 was 90,000. 2020 we had another huge market year, kind of gave me a huge boost. Still my biggest percent return. Like I haven't even come close to 570% since then. But yeah, so I do think it's possible. I just want to see it happen, right? Because it's like, yeah, it's totally possible. But again, without a super generous market like we saw in 2020, 2021, I would love to be able to see a 7-figure kind of figure at the end of a year and be like, yep, like I can manage, and I can manage losses and when they need to be, but not take oversized losses that really prevent me from getting to where I want to go. And so, yeah. And then another point and aspect, I want to share this chart here. If we go to my graphs here, maybe I should zoom in so you guys can actually see this here. So this chart, these are one of the many charts that I have that I actually have made available on my whole entire spreadsheet that I just released, I guess a month now ago. But essentially what this is gross profit, gross loss, and every month since 2017. And I made the gross loss positive so I can see, how close are they to each other, right? If I made these negative, they would be down here on the below zero, and I don't want that. I want to see how close they are to my gross gain or gross profit. And you'll notice here, like my entire career, you really can't see it because it's so small, but all the way leading up to 2022, 2023, I was at a really good streak of having my gross profit be bigger than my gross loss, meaning I was profitable every month. But if you notice here, and when we get into the second half of 2023, this kind of wedge, if you want to call it, gets smaller and smaller, right? Not only is my, if you want to call it like this, I don't want to start trading a technical analysis of my graphs, but like the bottom end of my gross loss is getting uptrending, right? Like we're still slowly increasing how much I'm losing per month. And then my gross profit, if you look at the blue line here, sorry, I guess I didn't mention that. The red is gross loss, the blue is gross profit. The blue line is now declining. It's like, so like my gross loss is increasing like this, and then my gross profit is decreasing like this. Like before you know it, if they just do a crossroads, like that's how you get unprofitable, right? And so I want to get back to increasing that gap that looks like this, right? Not decreasing it to where now I'm fighting every month just to find out if I'm going to be green or red, right? That's not efficient. That's not profitable over the long term. And I think, again, is the whole reason why the second half of the year was just getting more and more tough, because every month that gap was just they're just kind of slowly getting closer to each other. And again, can I blame the market? Sure. But the reality is I think it's my own trading, as always. I just need to be more selective. I need to be more efficient in picking when and where and why I'm either sizing up. And maybe I'm doing too much. Like I have like, I would say almost a dozen different plays. And like, maybe I need to really narrow it down. And I did review most of my setups for the year of like which were the most profitable. And first red days were by far my most profitable, which is why I was upset about UP, because it just should have been so much bigger. Like my first red days are like over like half my year. And no setup even comes close, right? So going into next year, that's kind of what I want to focus on. So, and again, I can ramble on, but I think you guys get the gist. That's kind of where I want to be, what I want to focus on. And hopefully Q1 has always been my best quarter of the year, call it January through March. So, really hoping starting out 2024 with a strong open, if you want to call it, and we'll see how it goes. So anyways, thanks so much for watching this, guys. Quite a longer video, but I know you guys enjoy them, and I enjoy them doing them as well. But anyways, we'll see you guys next time. Peace.